everybody, it's John Lone King. It is Friday, the 24th of July. Thank you for joining me for my live weekly market update. So the banner headline, whatever you saw when you joined, says it all. Rates are as high as they've been in a year. Came back down just a smidge today. I'm going to say the same thing I've been saying all along, which is this is all about what's happening in the world economy and geopolitically, what we've got going on in Iran and oil prices and inflation. It's just more of the same thing. And so I don't want to be the beating of the dread. I don't know what I'm trying to say. Anyway, I don't want to keep beating the same drum and saying the same thing over and over again and saying, oh my gosh, this is why rates are higher. Look, rates are what they are. I want to talk right now about human nature. Human nature is we want what we don't have. We want what we don't have. I was sitting in the barbershop this morning, got a haircut, and was listening to a couple of guys talking about, oh my gosh, I love my wife, but man, she just never does anything for me. She doesn't make me breakfast. She doesn't do anything. And I'm thinking, I have an amazing wife who enjoys making me breakfast, and I really appreciate it. And I thought, and I actually said to them, I said, it's funny because human nature is that what you have, you take for granted. And what you don't have is what you want. And I try very hard not to take my wife for granted. I think, again, human nature, we might do that. And the reality is, in thinking about that, it got me thinking about business and about specifically you, a home buyer, a homeowner, thinking about, well, I want a different market than the market that I have today. I want to win $1 million. I want all these things that I want. But once you have it, then is that solve your problems? Because I'm going to take you back on a journey. In 2020 and 2021, we had super low interest rates, and I had buyers who couldn't get their offer accepted. And they were super frustrated because they had a great market, but they couldn't get an offer accepted because everybody's bidding way over the asking price. And they were complaining and saying, man, what I wouldn't give, I'd pay anything in a payment if I could just get my offer accepted. I'm willing to pay up to this much. I'll pay extra in my monthly payment, but I don't have the money to compete with these people that are paying cash over the asking price because the house won't appraise for that. That's what the problem was back in 20 and 2021. Rates were so low, but the house wouldn't appraise. And that's because prices were going up so quickly. Appraisers look in the rearview mirror versus the market's looking out the windshield. And these buyers, rightfully so, were saying, my gosh, I would do anything right now with these super low interest rates just to be able to get my offer accepted. And so many of them weren't able to buy a home, weren't able to buy a home in the best interest rate market we've ever had. And so the moral of that story is no matter how good of a deal you can get, if you can't actually get the deal, you didn't get the deal, right? It's like the oh my gosh, we've got these cars that are on sale and you can get it for $20,000 off of MSRP. Only one available, and they put it in the ad and they advertise it all week, and that one's already been sold. And so it's a great deal, but you can't get the deal. So it isn't that good of a deal. And so now we're in the opposite environment. We're in the opposite market where rates are higher. There aren't as many buyers. It's going to be a higher monthly payment to get into the home right now. And everybody's complaining, I just want to wait for rates to drop. If rates were going to drop, then everything will be okay. Is it? Or will it be a different problem? Will there be something else that you're like, oh, well, I wanted rates to drop, so I thought that would lower my monthly payment, but I didn't realize that now I'm going to be having to bid higher because there's more competition. Because guess what? You're not the only person waiting for rates to drop. Everybody is waiting for rates to drop. And when rates drop, everybody will start looking for homes. And that is the definition of increasing in prices due to supply and demand. Okay, so careful what you wish for. What you have right now is you have an opportunity in front of you. There's never going to be the perfect market. There's never going to be the perfect home. There's never going to be the perfect interest rate. It's no different than when you're trying to find a spouse. There's never a perfect person. If you are nitpicking everything and saying, I don't like this and I don't like that and I don't like that, and I have a list and you got to meet all of these criteria or we're not moving forward, well, most of those people are still single. Like sometimes you're going to find exactly what's on your list, and it's okay to be picky, but you got to be realistic. You have to understand that when you're buying a house that is not a brand new house, there's going to be problems with that house. Otherwise, you'd be buying a brand new house. Truth is, when you buy brand new houses, there's problems too. But the point is, you can't be expecting perfection in the house, in your mate, in your expectation of interest rates, and when you're going to buy a home. Like best laid plans are, what do they say? Mike Tyson says, everybody's got a plan until you get punched in the nose. You got a plan of when you're going to buy a house, and then you get punched in the nose because rates drop, prices go up. Your payment didn't change. And so I want to really give you some things to think about today. Right now, for people who are thinking of buying a home, it's about negotiation power, because you have negotiation power. And it doesn't mean you have it on every single home, but it means that you can find homes where you do have negotiation power. You can find a house strategically. You're looking for the house that's been on the market for 2, 3, 4 weeks without a price drop, because that seller's freaking out. Strategically, you're looking for the house that went off the market, went pending, and just came back on, because that seller has already checked the box for, my home is sold, I'm moving on. And now they're freaking out because they're back in the position of, I got to go through this all again to find a buyer. I don't know what's going to happen. And that's your opportunity to negotiate. And so if you were saying, hey, John, I can't buy a house because I don't have enough money for down payment and closing costs, now is the time to be buying. Because every one of my buyers who had no money for down payment and closing costs struggled mightily to buy during 2020 and 2021. And the reason was simple, because there were so many other buyers that were a lower risk. So many other buyers that had a bigger down payment that when the seller looked at it and said, well, I'm not sure if the house is going to appraise, someone who's coming up with 20% down has the cash to cover a shortfall. Someone who's putting 0 down has no cash to cover the shortfall, at least in the eyes of the seller. And so now is your opportunity. Now, I don't know where rates are going to go. Right now, we're pushing the high 6s, and that's best case scenario. So long term, will rates go lower? I honestly am confident they're going to, but I don't know where they're going to go in between, and I don't know how quickly they're going to go down. They should be down already. We saw rates at the 5.99 level back in February before the conflict started in Iran. So rates should be lower than where they are right now. But if you say, well, I'm going to wait until they get back there, you're going to be competing with everybody else who's waiting to get back there, and you're going to end up not being able to negotiate. Now, if you have a huge down payment, maybe that's a good idea. If you're paying cash, actually now's your best time to buy a home. Now, if you're paying cash, you're not listening to me. But the truth is, when you're paying cash, now is the time to buy a home, because who cares what interest rates are? And you get the better price on the home. If you're financing, you've got the negative of the rate being high, but the truth is your payment is what matters. And your payment's the combination of the interest rates and your loan amount. And your term too, but most people are doing a 30-year term. So the interest rate and your loan amount. And guess what? Your loan amount is a factor of purchase price and down payment. Well, unless you have a bunch of money for a down payment, really, your loan amount is a factor of your purchase price. So as rates go down, purchase prices are going to go up. That's basic supply and demand. So now is your opportunity to negotiate. Now is the time, if you can find a way to get the monthly payment manageable for the foreseeable future, then you'll be in a great position once interest rates fall. Okay, the question is, when is that going to happen? Now, if you are not looking to buy a home, or if you already own a home, let's call it that, even better. If you already own a home, now is a huge opportunity for you in multiple fronts. Number one, rates are high, which means the interest rates on your credit card debt are really high. And that credit card payment is killing you. You know that it's killing you. You've been dragging your feet saying, I know, but I'm going to pay extra. I'm going to get it paid down. But it's not happening. And then prices still keep going up on stuff. And gas prices have come back up again. And you're continuing to take one step forward and then one step backwards, and you aren't changing where you're at. And so we need to change something. And part of that is, if you're a homeowner, now is the opportunity for you to look at using the equity in your home. Using the equity in your home to your advantage to get yourself ahead when it comes to your debt. At Summit Funding, I had 3 home equity products, which I thought was great, because prior to that, I had none. And now I've got 15. I have 15 different ways to help you tap into the equity of your home. 12 of those I never had before. So there's lots of ways that we can get you help when it comes to managing your debt. The other thing, if you're a homeowner right now, is you might be thinking, I really want to trade my house out for another one. And if you're thinking about that, now is the time to do it, because it was very hard to get somebody to accept a contingent offer when the market was super hot. And right now is your opportunity to trade out your home. And the truth is, even if prices are down, you're selling your house at a low price, you're buying the next house at a low price. Okay, so you're in the market. Therefore, no matter what happens with prices, they're both moving up and down together. So timing isn't as critical to you as far as rate or price goes. It's about opportunity. And the opportunity to find a home that you are looking for, and the opportunity to get that seller to accept your offer as a contingent offer. And on a side note, I have some amazing programs that help you to not be contingent, help you to be able to buy that next home without being contingent on the sale of your current home. But the last thing I'll talk about is outside the box opportunities. Right now is a really good time to consider buying investment properties. I'm going to do some videos about this next week. In the tax bill that was passed last year, the president added some provisions to giving people who have investment properties accelerated depreciation. Now, I'll explain more about that in the video, but there's some opportunities for people who have high income to buy investment properties and have that wipe out a lot of the tax that they're paying right now. And it's, again, you can argue to say, John, that's not fair. You know, some people get these advantages, some people don't. I get it, but I play the game based on the rules that are provided to me. And I'm not fighting whether it's fair or unfair, but you might say, John, I'm not in a position to buy a rental property. Why should I have to pay more in taxes? I get it. I didn't write the rules, but I'm taking advantage of the rules. And I think that's the key that we all have to focus on is there are opportunities within the market. There's an opportunity if you have the means, if you have equity in your current home, maybe we leverage that to buy an investment property, and then we use accelerated depreciation in order to get bigger tax write-offs in a faster amount of time. We use something called cost segregation that gives you greater savings faster through that process. Okay, Annie, I see your question. I'll get to that in just one second. So the fact is, you want to think about the opportunities that you have in the moment. And I'll tell you another really, really big opportunity right now is people who are 55 and older to reconsider or to relearn what is a reverse mortgage. Because reverse mortgages, for a lot of people, have a very, very negative connotation. Okay, I am a believer in reverse mortgages, but I'm not a salesperson in them. I don't sell people on reverse mortgages. I inform them. My mom got a reverse mortgage after my dad passed away in 2008, and it's the best thing that's ever happened for her. And I believe in them. I also know a lot of people have a lot of misconceptions. And so I am going to start talking a lot more about reverse mortgages and doing more videos about them to help educate you. Because whether it's you, whether it's your parents, because you know the number one reason why somebody doesn't do a reverse mortgage is because their children stand up and say, that's a horrible idea. And most of the time, the children are being selfish in doing so. That's the truth. Now, I understand the children don't want mom and dad to get taken advantage of. But there's a lot of reasons why mom and dad stop simply because they want to make sure you, their children, get an inheritance, and they sacrifice like they've sacrificed their entire life for you. And now they're retired and they're sacrificing again for you. And is that really what you want, or do you want them to enjoy their retirement? So I'm going to talk more about that going forward. But let me wrap up here with questions. So Annie said, just want to refi for a lower rate. That isn't an issue. I'm not holding my breath. Patience is a virtue. Annie, you're 100% correct. So the catch-22 right now is if you, again, I don't know where your interest rate is today, but I'll tell you that if you're just refinancing for a lower monthly payment, you're watching the market. Like, it's simply about where is your interest rate and where are market rates, and at what point does it make sense? And you got to remember, there's fees when you refinance a property. And so a lot of people, after buying their first home and a lot of people bought their first home in the last 4 years and have never refinanced and have no idea. Matter of fact, even in 2020, a lot of people bought their first home and they have no idea what a refinance is or how it works. And so let me educate you really quick, Annie. Generally speaking, you're going to want to save around 1% off of your interest rate for it to make sense. Now, if you owe $1 million, you can probably get away with saving 0.5% and have it make sense. The general refinance, actually, let me rephrase that, all refinances have fees. The bank has to do an appraisal. They have to do a credit report. They have to underwrite and process the loan. They have all of the work that they have to do the loan for you, just like they did the work when you bought the house. And you paid closing costs when you bought the house. The difference is, number one, when you refinance, you typically have equity, so we can include that in your loan amount. It doesn't come out of your pocket. Number two, you can get zero fee refinances. Like, well, John, why won't I do that? because the rates are higher. It's that simple. So the rate may not be higher than what you're paying now. It's what does the market rate offer today? And is the lender willing to charge less in fees in exchange for higher rates than what the market requires? Let me put numbers to that. If rates fell to 5% tomorrow, you're going to have lenders who are going to say, we have 0 fee loans. I will refinance you for no fees. Their rate's going to be 5.75. So they're going to get rid of 3% in fees, but they're going to charge you 0.75% higher in rate every single year. Now, if you think you're going to refinance again in 2 years, well, then that's a good deal because you only paid 0.75% extra. Now, mind you, that means you're paying 5.75. Now your rate today is at 6.75. So that's a heck of a good deal because you're still saving 1% off of your interest rate without paying all those fees. And my general rule of thumb is save 1% off of your interest rate when you pay the fees, save a penny off of your interest rate if you're paying nothing in fees, okay? Because it didn't cost you anything. So anything that's cheaper in interest, if it didn't cost you anything, is worth it. The problem is a lot of the investors into mortgages also pay attention to where the rate market is at and where it's projected to go. And if they think, hey, it's pretty clear to me rates are going to fall in the next couple of years and everybody I'm doing a loan for right now is going to refi, they're not going to offer you a free loan because they're guaranteed to lose money. They know that the future, like you're saying, hey, John, I don't want to pay fees because I think I'm going to refinance in a couple of years when rates drop. Well, they don't want to cover the fees for you because they're not going to recoup their investment. And that's as simple as why they do it, is recouping their investment. The cost to do a loan is still there. It's whether you paid for it or they did. And you don't want to pay for it because you think rates are going to drop further. Awesome. They don't want to pay for it because they think rates are going to drop further. So that's where it becomes a battle. And that's why I say if the lender is offering it. But in general, you've got to watch interest rates, but be careful because some people have called me, hey, John, I'm at 6.75 and I saw rates are at 6.25. They are, but you got to pay all the fees to get the 6.25. And it basically doesn't save you any money per month because your balance is going to go up. And even though your rate went down, your total payment's only $20 a month cheaper. It's a horrible idea to do a refinance in that situation. And so that's what you have to be thinking about. That's where you have to trust the lender that you're talking to. Now, I'm not saying trust me because I never trust the guy that says trust me, but hopefully you've listened to me long enough or that you'll continue to listen to me and understand that I really, really, really do believe that if I give you the right advice and including talking you out of doing a loan, then that will create loyalty where you're going to tell everybody you know and every one of your friends and family they should always call me because if I tell them they should do a loan, it's because they really should. And a lot of lenders right now are showing low rates because they're packing in a whole bunch of fees, like huge amounts of fees. And they're saying, oh, we're saving you 1% off of your interest rate, but they're charging you way more than the normal amount of fees, and it still negates any value to you. Or it takes a long time to make back and recover what you spent. So Annie, I'm not sure I went way further than what you're talking about here, but it was a good opportunity for me to kind of get on my soapbox and talk about refinancing. I think that if you have debt, then clearly refinancing can help you consolidate that debt and get a lower overall monthly payment, or keep paying the payment that you're paying today and pay it off faster. Okay, but in your case, and yeah, here she says, I'm only going to trust you 6.875. Yeah, and that's exactly right. Like, keep an eye on the market. I appreciate you trusting me. Everybody who's listening should only trust me. Listen to Annie. But the fact of the matter is, I don't know when we're going to get there. Like I said, we should have been there already. We're not at those rates. We should be at a place right now where you should be at, we should be in the high fives, and we should be talking about refinancing. We probably already should have been able to refinance you. Unfortunately, we hit this conflict in Iran. It thought it was going to get better last month. Now it's worse again. Rates are going back up again. Lots of moving parts. We just have to sit and wait. And that kind of sucks, especially if you're in a place where, man, I really wish that I could have a lower monthly payment, or I need to have a lower monthly payment. And that's the struggle. And so that's what we're going to be talking about. I'll be sharing more information about that as we continue to go forward. It does not look like there's any other questions. So I'm going to let you guys go and enjoy your weekend. Thank you for trusting me. Please share this with anybody that you know, or share it on your social media. If you haven't already subscribed, please subscribe. I really appreciate it. Hope you have a wonderful day, and we'll talk to y'all soon. Bye-bye.